Imagine you're standing in front of a massive financial map of 2026, scanning numbers that all look perfectly normal. Then suddenly, one of the most powerful banks in the world takes a red marker and draws a line that shoots straight off the top of the chart. That line represents gold, and what just happened this week is absolutely insane. Most investors were sitting comfortably watching gold hover around $4,800. Nice and stable, everyone happy. But then Bank of America walked into the room and said something that made every single trader stop what they were doing. $6,000 per ounce. Not next year, not in 5 years, but this spring, as in the next few months. Now, before you're thinking this is just another clickbait prediction, let me be very clear about something. This is not coming from some random blogger or a newsletter trying to sell you something. This is Bank of America, one of the largest financial institutions on planet Earth, managing trillions of dollars and advising governments around the world. They don't make calls like this unless they see something real, something massive that's about to unfold. So what exactly do they see that the average investor doesn't? That's what we're about to uncover, and I'm warning you right now, by the end of this, your view of your portfolio will change completely. Let's start with the man behind the math. His name is Michael Hartnett, Chief Investment Strategist at Bank of America. This guy has been studying market cycles for decades, and recently he did something absolutely fascinating. He went back and analyzed every major gold bull market in modern history, all 4 of them, studying the patterns, the duration, and the percentage gains. And here's what he discovered that changes everything. On average, gold jumped 300% over 43 months during these historic bull runs. Now take that number and apply it to the current cycle that started in late 2022. The math points you directly to one number, $6,000, and not in some distant future, but by April, May, or June of this year. But here's what gets really interesting. This isn't just hopium or wishful thinking from gold enthusiasts. This is based on actual historical patterns that have repeated themselves consistently for decades. Now you're probably wondering why Bank of America is so much more aggressive than everyone else on Wall Street. What are they seeing that other analysts are missing? The answer comes down to 2 words that should terrify anyone holding cash right now: great debasement. We are living through an era of money printing that has never been seen before in human history. The United States government is spending money it doesn't have. Europe is doing the same, and national debts are hitting levels that were once thought completely impossible. And there's only one way governments can pay for all of this spending. They print more money, pure and simple. When you print money at this pace, something very specific happens. Every single dollar becomes worth less in real terms. Every euro becomes worth less, every pound becomes worth less, and your savings account is literally losing value while you sleep. But here's the thing that makes gold different from everything else. It can't be printed out of thin air. It can't be created with a computer keystroke, and the biggest institutions in the world are finally waking up to that reality. But wait, there's something else happening right now that almost nobody in the mainstream media is talking about. The supply crisis in gold mining, and it's more serious than most people realize. For years, the gold mining industry has been chronically underfunded, with exploration budgets slashed and new projects canceled left and right. And the brutal truth is this: we're not finding massive new gold deposits anymore like we used to decades ago. The easy gold that was close to the surface has already been mined, and what's left requires going deeper, spending significantly more, and dealing with much tougher environmental regulations. Michael Widmer, who is Bank of America's head of metals research, said something absolutely critical that everyone needs to understand. He stated that rising production costs are creating a permanent floor for gold prices that keeps moving higher. Translation: gold physically cannot drop back down to $2,000 or $3,000 anymore. The baseline cost is shifting upward every single day. Think about that for a moment. A permanent floor that keeps rising while demand keeps exploding. Now combine that supply squeeze with what's happening on the demand side of the equation. Bank of America is calling it the institutional stampede, and it's unlike anything we've seen in modern times. For years, central banks were the dominant buyers in the gold market, with China, Russia, India, and Turkey stacking gold by the hundreds of tons every quarter. And that institutional buying from central banks hasn't stopped, it's actually accelerating. But now there's a completely new player entering the game with force, and that's private institutional money. Massive hedge funds, pension funds managing billions, sovereign wealth funds, and ultra-wealthy family offices are rotating trillions of dollars into gold, and here's exactly why that matters more than anything else right now. When you have trillions of dollars chasing a limited physical supply of gold, prices don't just crawl higher slowly, they absolutely explode. But I know exactly what you're thinking right now. Is it too late to get in? Gold is already at all-time highs. Did I miss the boat? Bank of America says absolutely not. In fact, they're saying we're still in the early stages of this move. Even at $4,800 per ounce, gold makes up less than 1% of most investment portfolios globally. If investors simply moved their allocation from 1% to 3%, just that small shift alone would create a buying wave that easily pushes gold past 6,000. Let me put that in perspective for you so you understand the magnitude. Most people have more money sitting in a single technology stock than they have in all their gold holdings combined, and that's about to change dramatically. And here's where the timing becomes absolutely critical for anyone watching this right now. The Federal Reserve is widely expected to keep cutting interest rates throughout this year. They've already started the cutting cycle. But here's the problem that creates the perfect storm for gold. Inflation is not going away. It's sticky and persistent. This creates what's called the Goldilocks scenario for precious metals. Low rates make gold attractive because there's no opportunity cost to holding it. And simultaneously, high inflation makes paper currency less attractive because it's actively losing purchasing power every day. The Federal Reserve is trapped in a corner with no good options. They have to cut rates to support the economy and prevent recession. But in doing so, they're essentially pouring rocket fuel directly onto the gold market. Bank of America is betting that the Fed will continue cutting rates even if it means gold prices go to the moon and beyond. Now, let me show you something that most retail investors are completely missing in their analysis: the geopolitical dimension of this gold rally, and it's more important than the technical charts. The world is fracturing right before our eyes. We have active wars in Europe and the Middle East, creating massive uncertainty. We have escalating trade disputes, aggressive tariff wars, and countries openly questioning the dominance of the United States dollar in international trade. When global uncertainty rises to these levels, where does smart money flow for safety? It flows into gold, the ultimate safe haven that's worked for thousands of years. It's not just about making profits anymore for these big institutions. It's about protection and financial survival. Gold has successfully preserved wealth through countless wars, revolutions, currency collapses, and economic disasters for over 5,000 years of human history. And right now, the smartest money in the world knows something critical. They're not buying gold simply because they think the price will go up. They're buying it because they're genuinely scared of what happens if they don't own it. So here's exactly what this means for you and your financial future. If you don't own any gold yet in any form, you need to seriously consider starting a position as soon as possible. You don't have to bet your entire portfolio or go all in, but having zero exposure to gold in this environment is a massive and unnecessary risk. Whether it's physical coins, gold bars, exchange-traded funds, or shares in quality mining companies, you need some skin in this game. If you already own gold, congratulations, but don't panic sell just because the price feels psychologically high. Remember, Bank of America is projecting $6,000 by spring, and they're not the only major institution raising their price targets aggressively. This is not a short-term speculative spike that will reverse next week. This is a structural bull market being driven by fundamental forces that aren't going away anytime soon. But here's the part that nobody in the financial media wants to openly admit. We are witnessing a historic revaluation of what real money actually is at its core. For decades, people have been conditioned to believe that paper currency is money, dollars and euros and yen, but paper currency is only worth exactly what governments say it's worth at any given moment. It can be created overnight with a policy decision. It can be devalued with a single announcement. Gold, on the other hand, has been recognized as real money for over 5,000 years of recorded human civilization. It survived the fall of the Roman Empire, it survived 2 catastrophic world wars, and it survived the complete collapse of countless paper currencies throughout history. And now, in an era of massive government debt, runaway spending, and unprecedented geopolitical chaos, the world is remembering exactly why gold has always been the ultimate store of value. Bank of America isn't saying gold might possibly go up if conditions are favorable. They're saying it's highly likely based on historical data. They're saying all the fundamental conditions are perfectly in place. They're putting their institutional reputation behind a $6,000 price target. Whether you're holding a single 1-ounce coin or managing millions of dollars in assets, the message coming from this analysis is crystal clear. The era of cheap gold priced at $2,000 or $3,000 is completely over. The spring of 2026 could very well be the most explosive and profitable period in the entire history of precious metals trading. And if you're not properly positioned right now, you're going to watch from the sidelines while others build generational wealth. So here's exactly what you need to do starting today. Watch the price charts closely, watch every Federal Reserve announcement and decision, and watch what the biggest institutions are actually buying with their money. Because if Bank of America is right, and historical patterns strongly suggest they very well could be, we are about to witness something absolutely extraordinary in financial markets. Stay completely focused on the big picture, stay informed with quality information, and whatever you do, don't let this critical moment pass you by. The next few months could literally change everything about your financial future.